More significant, you think, Archegos or the GameStop short squeeze we saw not too long ago?
I don't think you can say which it will be because, or which is more significant, because I think each one is just a little more of a chip at market structure. Each one is telling you something is off, and I think that so this is the latest one, and even the smartest people I talk to on this, and we're talking to my friends who know the markets, who know it much better than I do because they participate. They're sitting here scratching their heads, but they're all saying, "Yeah, we see it coming." Because remember, whatever is going to happen when the market goes, if the market goes, it's always going to be something out of left field. I've been saying that for the longest period of time. And you have people gaming the system, gaming each other, and each one is thinking they won't be left holding the bag. So there's always somebody who's coming up with something new and some other way to sort of, push their own returns in this market. I mean, look, I had one guy I was talking to this morning, and he's trying to figure this out. And he says, "Tell me, I thought they were long, so how's there a margin call?" And he was trying to just figure it out intellectually. So I think there's so much people don't know about this. We don't know if it's the first, the second, the third, the last for some period of time. Yeah. But we know it tells us something about the structure of this market.
I'm still trying to figure out what it does tell us, Kate, especially because it seems like another case where there are rules that were supposed to have prevented this. There's supposed to be disclosures when there's this big of a potential impact, but none of that seemed to happen here, right?
Right. Well, I think one interesting thing is these banks have to do regular monitoring of their prime clients, right? If they're going to be lending them money, there's a whole know your customer process that involves a ton of paperwork and a ton of exchanges every year. And then there's ongoing monitoring of the funds, their assets, their cash positions. I think we know as of today that Nomura and Credit Suisse are potentially facing significant losses. Credit Suisse hasn't quantified them. Nomura has said it could be up to $2 billion. Goldman Sachs has said that the losses they anticipate or have seen so far are immaterial. Not much word out of Morgan Stanley. But I think you can see already there's a little bit of a divergence here between different banks and how they did their risk management. So that's one thing to note. And I think there probably was quite a lot of disclosure from Archego to these funds, but these banks rather, but they have only so much control over whether Archego, for example, is going to sell off a losing Viacom stock, which turns on a dime. And I would agree with Herb that, it's kind of early days on the Archego situation. It's kind of hard to know whether that's going to be more or less significant than GameStop. As we sit here right now, it seems less significant, but there could be more things to come out of this. And what they both are about in a very broad sense is market volatility, stock market volatility right now, unexpected drops. The fact that a Viacom CBS tanked in a few mere days without clear evidence as to why that happened fundamentally is the kind of market we're seeing in 2021.
Shepard Smith here. Thanks for watching CNBC on YouTube.